I'm a researcher by nature. I love looking up things. I love because I feel like knowledge breeds my creativity. So it helps me not only understand things, but it also helps me perfect things.
Hey, my name is Julian, and I'm with the Real Estate Investors Group. Today, I have a great guest. Her name's Ashely Wilson. Ashely is a real estate investor, multifamily owner, best-selling author, entrepreneur. She has multiple ventures going on: Conference Connect, Apartment Addicts, Bar Down Investments, and How's It Look. We will be talking more about her journey, dissecting it, and finding out what the skills and habits are that have helped her succeed. And so, Ashely, thank you so much for coming on. How are you?
Good. And thank you so much for having me.
Awesome, Ashely. I want you to give the introduction. Like, what have you known for? What have you done in your life? Like, can you give us a bio of yourself?
Yeah. I mean, that's a loaded question. I've done a lot of different things, but with respect to real estate, I started in 2009. I had a W 2. I was working in clinical research and development for a large pharmaceutical company. And I started investing in real estate on the side. Similar to most people, I read Rich Dad Poor Dad and I was hooked. But
Hmm.
coinciding with that, I also found the Bigger Pockets community through my
Nice.
now husband, and we thought real estate was a great venture as opposed to the stock market for a multitude of reasons. One of which is the tax benefits, two is leverage, three is it's backed by a tangible asset. So it's not as speculative as the stock market. We decided to invest in real estate while we continued working our regular jobs, and we had a lot of success. So shortly thereafter, we transitioned, myself first, outside of our W 2. So I've done everything from short term rentals, long term rentals, house hacking, flipping, high
Mm.
end flipping, and now I'm in commercial real estate. I would definitely qualify myself as a serial entrepreneur. I think I'm on my seventh or eighth company that I've created and built. Everything
Hmm.
from apps to websites to, I think it's three real estate companies, real estate focused companies. I also created a horse business. So I've kind of done a little bit of everything, which I think has slowed my overall progress. But in terms of connections and being able to grow something really quickly, I'm able to do that just because of the network that I have. It's very deep, and I like to be around really smart, talented people.
Mm. That's wonderful. So, I guess that's an asset that you have that you bring, to your life, and it's that you're able to connect with other people. Were you always like thinking about this from back in 2009 when you were starting this journey and real estate investing? Were you thinking like the people that I connect with, this is really important and it's going to help me succeed in the future in whatever endeavor that I am getting into?
Not intentionally. I don't think I've ever, even to this day, been very intentional about finding people or nor social climbing, because I know that's the negative side of
Mhm.
someone who seeks out networking in a very programmatic way. I think it's rooted in the fact that how I was raised was my mother always taught me that there was more good in someone than bad. And it was really the fault of myself if I couldn't find more good in someone than bad. So it allowed me to develop these conversations, deep conversations with people at a very early age and read people. I think I'm incredibly good at reading situations, reading people. And whether you see it as a negative or a positive, up until probably 5 years ago, I saw it as a negative because I always thought that I had all these different groups of friends and associates, but I would never want them to cross pollinate. And it's because, not because I didn't think that they would get along, I felt like I personally changed. I was a different
Yeah.
person depending on the people that I was hanging out with. So almost chameleon like in nature. And I never saw that as a value and something that was a strength of mine until actually Liz Faircloth, who's also in real estate,
Nice.
she pointed it out and talked about the positives behind it. And when she broke it down, it made me self reflect and realize, oh, that's why I'm a good negotiator. That's why I'm really good at making good connections right away. That's why I'm really good at, my husband likes to joke that I have, a secret message tattooed on my forehead that's tell me your deepest and darkest secret within 30 seconds of meeting me. I have that trust factor that I don't know why, but people do tell me their deepest and darkest secret immediately after meeting me. I don't know what it is. I am a vault though. I don't share any of that information, and maybe they can just tell from my vibe that I don't do that, but it has served me very well in terms of creating businesses and working with different types of people. So I think that is definitely one of the pillars behind why I have been able to find success on so many different ventures.
Gotcha. Okay, that's incredible. So Rich Dad Poor Dad got you into this, and then you started real estate investing. So you dabbled in different sectors like short-term rentals, long-term rentals, Airbnbs, right? Even house hacking. Um, Initially, when you were doing these ventures that um, be, before getting into commercial real estate, what do you think was like how was that journey for you, like getting into it? Like how did you learn to do the right thing and not mess up in a way that others would probably do when they're getting into any of these different ventures that you did in the real estate market?
I think the number one reservation people have is capital. And that's where I made the biggest mistake over my career. So I always thought that I could only use my capital to act in real estate and own real estate. So if you look back on my journey, I actually started investigating real estate and investing in real estate 2 years prior to pulling the trigger. And that was in large part due to not only a comfort of knowing how to invest, etc., but also with the funding aspect of it. And that carried forward for almost a decade in the sense that I would only, when I did high end flipping, I would only, now I had a lender to help support me, but in terms of I have never gone in a deal where I didn't put my own capital in it, even today, even in large multifamily for different reasons today. But when I was flipping, I didn't need to put money in. With commercial real estate and partnering with people, that's a kind of a different reason why you put capital in. It's to have an alignment. But when you're flipping, you can get by with bringing on equity sources, hard money lenders, partners, equity partners that don't really require you to put in that capital. And I think that was a deficit in my growth. So, in terms of the two kind of like mindset limitations, one is essentially funding. And then the second component, so I saved up and I was dating, then engaged and married to someone who's very fiscally responsible. So that combined, we had a good savings because he educated me on a lot of aspects of being fiscally responsible. But the second piece of it was construction knowledge, and I didn't have that barrier of entry. But that's uh, a lot of folks don't enter because of that lack of knowledge when it comes to construction. I grew up
Mhm.
with a general contractor as my father. My dad has
Yeah.
owned his business for over 45 years. So I never had that fear of not knowing the construction piece of it. The piece that I didn't know is how to um, operationally put things in play. So because I was coming from actually kind of a very well balanced background in the sense that all growing up before graduating from college, I worked for a small family business. And then post college, I worked for large corporate America. I had the ability to see two different ways in which businesses run. One is more on a small, like, everyone's doing all different types of positions and they're wearing multiple hats, as opposed to here is a systematized way in which a large corporation operates. So I think for me, I was able to, for example, when I got into short term rentals, I was able to systematize it right away because I figured out, okay, this is the exact process. This is how I'm going to automate it. And this is before we had technological advances like the Ring camera and, different codes that you could plug in and other automations. I mean, this is before. I know Airbnb started before VRBO, but VRBO was actually more popular than Airbnb at the time. So VRBO was the main platform you put your short-term rental on, and it was clunky and there were other issues behind that too. So I had to figure all of it out, but I think that a lot of people don't realize that they have a lot of the resources that they need to get started. They think that there's this like cliff from your whatever you're doing in your W 2 when you transfer to real estate, but there isn't. It's just another business. It's a different product, but it's a business. So regardless of where your background is, if you're good at marketing, good at accounting, attorney, it doesn't matter what the product is. There's so much transferable information that you can apply and act on. So you just really got to lead with your strengths. If you're extremely fearful about something and you're not capable of acting on some aspect, the beauty of real estate is you can bring in partners or you can pay someone. So you really have two options to solve your deficits. So to me, I think that that was something, that I realized very early on, except for the money component, and you can build from there.
Hmm. Okay, that's incredible. Yeah. Um, it sounds like you learned how to y- automate and use other people and or hire in order to fill in your deficits, your gaps. And um, when getting into this, I know that you for example, you also coach students, right, in apartment addicts, and you have like some way that you pretty much like give them an understanding of what they're really good at, starting with their perfect day. Is that something that that you practiced with, with yourself, and can you just share that with the audience as well, like how they could learn what their strengths are and how they could, operate in that way so that they could not have to, I guess, be a jack of all trades and have to juggle a bunch of balls at the same time.
Yeah, I am a believer that you should always do things that give you energy. And
Hmm.
things that give you energy are typically things that you're really good at naturally. So when I look at my day before me and it's like, okay, Ashely, you're going to live in spreadsheets all day today, that is draining. And that's draining
Yeah.
to me because I say to myself, what is something that is going to make me jump out of bed before my alarm clock goes off? And not anxiety, but I mean something I'm excited about doing versus what is something that I would hit the snooze on. And if I
Yeah.
had to go and do spreadsheets every single day, I would hit snooze. But if I'm problem solving and coming up with ideas and I'm working with phenomenal teams that take my ideas and then integrate them, that gives me energy. I am definitely, a lot of people say I'm an ops person, but I am actually a visionary and an ops by necessity. I know how to do
Hmm.
ops. I can do ops. I can't do it as detailed and as step by step as someone who excels as an integrator. I can do it to a degree, but I'm a visionary by heart. I love problem solving. I love problem solving at a personal level, at a business level. So when I look at coming up with my perfect day from a business standpoint, I look at what is going to ultimately give me energy, excite, and then when I work with whoever I work with, I'm always trying to figure out what drives them. So whether it's students to figure out, okay, what aspect of the business would you get the most energy out of? If I can find that out, I have a higher likelihood of helping them achieve their goals, their overall goals, because they're naturally going to have more success doing all the steps to get to the next level. But if you're pushing someone who is really good at networking to be an underwriter, they're going to get frustrated and they're not going to progress as quickly. And then they're going to feel like this isn't for me, when really the overall business could be for them, but they're in the wrong department of that business. So that's where I kind of like to start. And then when you take it at a higher level and you look at it in terms of like your life and your family, why are we all doing this? I mean, we could do anything really, right? So, what does this business provide that another business doesn't provide? And that's where you have to kind of understand each person at an individual level and link those two things together. So, I really enjoy having a work life balance, but my work life balance probably doesn't look like most people's work life balance. I'm okay working until 11 o'clock at night, starting at 6 a.m., having two breaks during the day to spend time with my family, and then pulling all nighters once a month. That's not a lot of people's work life balance, right? But that doesn't make it better or worse for me. I That's the way I tick. So finding out how someone operates, because you have to also understand their bandwidth, especially when it's someone new. They're normally coming in with a W-2, right, into the coaching program, and they're normally wanting to exit that W-2. If you burn them out because you don't understand how their personal bandwidth works, they're also not going to have success, even if it is something that excites them. Now, the one secret ingredient is the fact that when you find that thing that excites them, they typically are willing to push their bandwidth further than if it was something that drained them. So I am just trying to figure that out on an individual level, specifically when we have our accountability calls. I'm trying to kind of psychoanalyze people to help them find success.
Yeah. Okay, that sounds great. That's a great description. I love that. Um, and so when you look back, let's get into the real estate investing, because I think you really gave a really good understanding of how people can do that for themselves, kind of seeing what gives them energy. But getting back to the real estate investing, I know that you know, you got into these and you automated these companies and you treated it like another business. And so what is the this like when you look back at your career, when you like went from a different business to another business, what were you going after? Like what was your reason for driving, this growth, um, that allowed you to actually do it in a way that eventually you scaled up to multifamily, which is, I guess, like the bigger asset class, right? So yeah.
Every transition I've made has been for different reasons, but if you were trying to categorize them under one umbrella, it really is this internal drive I have at always being the best version of myself. Like most people say, oh, it's financial freedom, but then they have financial freedom and then they keep working. So it couldn't have been financial freedom. And
Mhm.
then other people, they find financial freedom and then they stop, but they don't have success. They aren't happy, so they look for something else. So once again, I think it's something else. I think entrepreneurs are naturally people who are always looking for the next best thing. And entrepreneurs struggle with shiny object syndrome. That's why they're entrepreneurs. They're able to transition from the day to day and, you know, find blue oceans instead of swim in red oceans. So I personally think that for me, growing up being around very affluent people when I wasn't financially, my family wasn't affluent. We were um, struggling to make ends meet. that showed me a different lifestyle that I aspired to do. So when I was transitioning from college to my career, I looked for opportunities where I said, I want to be there for my family, but I want to make the most money as possible. So originally I wanted to be a physician, and then that transitioned to I wanted to be a CEO of a pharmaceutical company because that made even more money. And that led me to, okay, well, the drawback there is it's golden handcuffs. So I met the head of it was at the time Wyeth, and
Hmm.
he like never saw his family, and I was like, well, that I'm not
Wow.
I'm not working towards my goal, then I'm actually kind of working against my goal. So then I was like, okay, real estate's appealing because real estate gives you that. But then I felt like in real estate, especially how I built. Now, if I go back knowing the knowledge that I have now in multifamily and went back to flipping, I could create a better system. But at the time, I didn't. So I felt like flipping to me was like another job I had created for myself. Plus, it was heavily taxed, which is once again working against why I went into real estate in the first place. And then when I went into commercial real estate, I was like, okay, here's kind of the holy grail where I have the ability, it's a larger pie, so I can bring in people to help really operate and run this business. But my husband likes to joke and say that no matter how much money I ever made, I would always find something else to work on. And I think that's true. I'm someone who I'm a researcher by nature. I love looking up things. I love because I feel like knowledge breeds my creativity.
Hmm.
So it helps me not only understand things, but it also helps me perfect things. Um, so, I mean, I guess it's just I'm always very inquisitive to keep looking and pushing myself and maximize my value to a business, to all the charitable organizations I'm a part of, my family. Really, just I don't know, I'm a worker, I guess. I just
That's
love
awesome.
the chase.
That's awesome. Yeah, that says a lot, and you know, it's going to keep you going for sure. And for the people listening, maybe you're one of them, like one like Ashely. So I want to get into some of the different aspects of real estate that you got into. So I know that in everything that you got into, you kind of found a niche, right? Like when you got into how's it look, you were like in high end home flips, and so and then now you're in multifamily, but you have like a certain criteria of multifamily. So I kind of want to touch on and speak on, what the benefit is of having a focus. And I think you can, bring a lot of really good experience, to that. So can you speak on that?
Yeah, it really goes back to how I analyze people. So when I analyze people, when we're hiring, even for an example, like I'm trying to figure out what is the uniqueness about that person, what has them stand out amongst all of the other candidates with a match on what we're looking for. And the reason I do that is because it's all about finding the perfect fit. And if you find the perfect fit on personnel and technology, you can beat out all of your competition. But when you want to talk about exponential growth, it comes to taking that combination and then applying it towards a niche. So when I was talking earlier about find the blue ocean, don't swim in the red ocean, I interviewed a guy one time and he was a dentist, and he found out about real estate investing because of um, the cash flow. All of his colleagues were talking about, oh, it's great cash flow. You know, it's better than putting your money in the stock market. And that's what originally attracted him to real estate. But what he realized is he didn't need the cash flow, he needed the tax write offs. So
Mhm.
he then looked at it from a tax write off perspective, and he was like, real estate isn't the best vehicle for tax write offs. So why am I in this class? Oh, because I followed a red ocean. I swam in a red ocean. I listened to all of these people talking about real estate because of the cash flow, when in reality, I should be looking at, and I forget what he ended up investing in. It was like oil or drilling, or I have no idea. I can't remember. But the point is of the story is that when I am looking at a business, I'm looking, how can I niche down and be an expert at something where my competition is not focused?
Mhm.
So, for example, I just launched in February a new company called Conference Connect. And Conference Connect is centered around half day or longer events, conferences, expos, and it's a marketplace bringing together event organizers, speakers, and attendees. Well, what's interesting about it is when people first hear about it, they're like, oh, it's like Eventbrite or Meetup, but it's not.
Mhm.
So you have to pay attention to the fact where it's like, okay, it's not this, but your audience thinks it is. So that
Mhm.
is your competition in a sense, but directly it's not your competition because you have carved out this niche that your competition isn't focused on. Your competition isn't focused on more business type events. They're focused on any time someone wants to get together and meet up and free events. So it's completely different. So you're kind of re-educating your audience. The same applies for real estate. So it applies for real estate because, and the reason how it ties into this is you have, whether you know it or not, a sphere of people who know what you're doing. That could be family, it could be friends, it could be real estate brokers, it could be real estate investors, it could be just people on your periphery. If they don't understand your niche, they're going to feed you things that are not what you are looking for, and it's going to distract you. And as an entrepreneur, you have shiny object syndrome, so you're going to be distracted. What you need to do is you need to be so laser focused on your niche that you not only not look for anything else that comes your way, but you also simultaneously educate your circles. So if I say to someone, I'm looking for a green Jeep Wrangler, and someone sends me a red Jeep Wrangler, and I say, oh, I'll take a look, that person knows that I'm not hyper focused on green and they can send me an orange one, a yellow one. But if I said, no, thank you so much for sending it to me, I'm only looking at for a green Jeep Wrangler, do you think they're going to send me a blue one, even if it's the best deal? No, they know that I've already turned down the wrong color. So they are only going to look for things that fit what I have told them. And because I've set up a barrier, they're also going to be more likely to only look for those green Jeep Wranglers. So I'm saying all of this because when you niche down, you become an expert in that space. And people know you as the person who does that. So for flipping, for example, I got a call one day and it remains one of the better deals that we ever did. And this
Mhm.
woman called me and she said, I have a house. It just came on the market. It was like 3 or 4 days prior. And um, I was told that you would be interested in it. And I was like, okay, let me know about the house. Long story short, it was listed 3 or 4 days prior for I think 495, and it wasn't in bad condition at all. Like I was expecting a catch. So I said, okay, I'll come over and take a look at it. I come over, I look at the house, and I'm like thinking to myself, there's there's got to be something wrong with this house. Like there's got to be something major that I'm missing. How is like why is she pushing me to buy this house? So I ran the numbers and I was like, you know what? For S and G's, I am going to throw out that I can't have an offer with a 4 in front of it. It will be a 3 in the 300 range. And I called and told her that. And she said, okay, just write up an offer. They're just going to take whatever you put, just write up an offer. And I said, I don't understand. Why wouldn't you just drop the price 50,000 or 100,000? You get into a competitive bid process. And they said, because we know and we've heard from everyone that you do these types of houses. And I was like, okay. So I called up my father and I said, Dad, you got to take a look at this house because I have to be missing something. I don't understand why they are willing to sell us this house for this price. Or, I hadn't had a price yet, but in the threes when it was just listed. So my dad goes over and checks it out. And he's like, you aren't missing anything. I have the exact same number on rehab. So once again, I was like, you know what? I'm going to lowball her. And I said 315. So this is day 7, it's on the market. This
Yeah.
is during the height of the market. This is not like things weren't selling, you know? So anyway, I said to my dad, I was like, there's no way, sorry, there's no way we're gonna get this. And he said, well, we'll see. So we ended up getting the house for 315.
Wow.
So it just goes to show that opportunities find you, so to speak, if you do all the groundwork of educating your audience, but also staying very niche, because then people know you for something. And that leads to just having a carve out in the market space that that's what you do. And most people won't try to compete with someone who's known for doing something like that. It's not
Mm.
like we see anyone out here trying to compete with Robert Kiyosaki, right? There's only one Robert Kiyosaki. There might be other people who talk about real estate, you know, but no one's trying to call themselves the grandfather of real estate, right? Or the alternative to Rich Dad Poor Dad. He is known for what he does because he's been so focused on really creating that identity and sticking with it.
Yeah, that's a great example of why niching down is great. Now I know that. Okay, let's touch on like why you went into multifamily. Like you could have stayed in, doing the smaller kind of real estate investing vehicles, that you were doing, but then you decided to get into multifamily. I guess what was the reason? Like, can you walk us through like how that shift, happened, and then how you were able to start with multifamily, and you didn't even start with like the lower multifamilies, you just started with like bigger apartment you know uh complexes. So yeah.
With single family, I got a tax bill one year and it was a 6-figure tax bill. And I looked at it and I said, I flipped and I named a house for free. And I couldn't get past that. I couldn't get past the fact that I worked on this one house for 3 months for essentially free, because that's
Hmm.
the entire profits of that particular house went to the government. And I was like, there's got to be a better way. There's no way that I should ever have to pay a 6-figure tax bill. Like, that's not how the wealthy get wealthy. The wealthy don't get
Yeah.
wealthy because they make more money. The wealthy get wealthy because they keep more money that they make and they reinvest it. So, how do I keep more money that I make and reinvest it? And
Hmm.
that's large commercial real estate. Multifamily provides the avenue in which you can keep more money that you make. The trick is, because there's always a catch, that you can't stop. So as my husband likes to say, you defer, 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 die. So that's the game plan. You can't stop once you start, because unless you're lucky and you get another situation that we had with opportunity zones where you can 1031 into an opportunity zone, keep it for 10 years and then exit the opportunity zone. That's really the only way you can get out of having a catch up. But that, to me, that single event, I will never forget it. And I said, there's got to be a better way. Landed on multifamily. And yes, to your point, I did not go for small rentals. I went for large rentals. Now, knowing what I know now, you can make as much, if not more, doing small rentals as large multifamily. But at the time, I thought this was the biggest and fastest way to do it. I am also not a believer, and I don't like hanging around people who have this mindset of, oh, this is the way you do it because this is the way everyone does it. So, like the stacking method in multifamily, where you go from a duplex to a quad to an eightplex to 16plex, that is one way you can do it, but that's not the only way you can do it. We're not all created equal. We don't all have the same skill set. We don't all leverage our skill sets to the maximum benefit that we can. So I'm just not a firm believer of, okay, just because the majority does it some way, one way, that it can only be done one way. I am always a believer in there's always a better way to do something, no matter what. There is no one and tried and true way that everyone has to follow. So, what I did is I knew what my strength was. My strength was in construction and construction management. And I went out and I voiced that to folks. And I said, I wanted to get into commercial real estate. Here's my strength. And I noticed a deficit. Once again, this is all about knowing the intricacies and niching down. I knew that the industry lacked folks on ownership teams that had construction experience. And if you think about it, it kind of makes sense because anyone who has construction experience typically doesn't have financial literacy experience as well. Like they're normally, if they do, they're running their own construction company. But someone who has construction knowledge is typically not in a position in which they can invest or around people who teach them about investing. By and large, I'm not saying everyone, but by and large, that's the case. The folks who gravitate towards owning large multifamily properties, they're typically engineers, physicians, typically more traditionally educated folks. They're on a different track and they're talking amongst all of their friends and they get the bug and then they transition into it, but they're not coming from construction. So there's a huge gap. There still is a huge gap on all of these ownership teams of someone who has construction experience. What ends up happening in the way that they're all exploited is they turn to third parties to manage it and then they're no longer aligned. And what I mean by that is they have a business plan in which they want to hold an investment for 3 to 5 years. They want to come up with construction plans that get them through that 10-year hold. But instead, what ends up happening is they have a construction manager who's trying to do the right thing, but is putting, a 30-year roof or a 40-year roof on a project that you just need like a 10-year roof on, a 10-year shingle on. And
Right.
that has a significant cost reduction, especially when you're talking about 30 buildings. So because I have that experience and knowledge, I was able to showcase that and use that to my benefit as I talked to prospective partners and said, this is the value that I could provide. It just so happens that one of these groups were under contract to purchase a large apartment, and one of the buildings had just burnt to the ground while they were under contract. And they were going to have to take over rebuilding this apartment, and no one on their team had construction knowledge. And further, that building had to be built within a specific period of time. Otherwise, they didn't receive the insurance proceeds. So they did not have time to even figure it out on their own. They really had to rely on someone who had experience and was aligned because they had to stay within budget and they had to get it done by a certain period of time. So that's where I stepped in, and that's how I was able to leverage an an existing skill set I already had and go into multifamily, learn from other folks. And then from there, the rest is history. Kind of built my own business around multifamily, learned all aspects of multifamily. And that's, what we have today.
Awesome. That's amazing. What do you think have been the skills that you find that are the most important that people should prioritize in the beginning of their journey to build momentum, especially starting in multifamily?
I really think it's about consuming as much knowledge as you possibly can. And if you want to take action right away, it's about trying to be really intentional about finding someone who has a deficit on a value that you have and can be of value to that person. So if you are really good at marketing and social media and you see that you look up to someone who has really good operational experience and knowledge in the industry, you can trade off. You can either partner or you can just, to be honest with you, when you first get started, even if I did it all over again, I would do it for free, or I would do it for a lesser amount than what that skill set was really worth, just to get my foot in the door, because it really is a key to unlocking like massive potential for financial freedom. So to me, if that means that you have to keep your W 2 and grind out the hours in the beginning, it is 100% worth it. Now, once again, you don't always have to do that. I would be a hypocrite to go from saying that's the only way to do it when I just said there's always millions of ways you can do it. But that being said, I think that it's a team sport. Flipping is not really a team sport. It can be, but you can operate independently too. Owning large multifamily is 100% a team sport. You can't do everything. You just can't.
Okay, gotcha. All right. Well, that is, yeah. Research everything. That sounds like the truest thing ever. So when it comes to let's walk us to through one of the last deals you did. For example, could you tell us like where the lead source came in, how you did it, how you underwrote it, who else was on the team, helping you, operate this property or asset manage it, and then I guess like what your outlook is, on the exit side, and from capital sourcing to lending, all that.
I'll tell you about it. It wasn't our last deal we did, but we did a deal where it was a deal that I had pursuing for two different ownership groups, like the current ownership group and the ownership group prior to that. I had been following this property that I liked, and we couldn't get any traction on the property. And I thought, I heard rumors that the property might be going on the market. And I just thought they already knew we wanted the property, and they weren't willing to sell it to us. So I thought, okay, well, it was kind of a done deal. But what ended up happening is the broker actually reached out to us because we had a good relationship with him and the brokerage in general. And we ended up getting the deal. So relationships do obviously matter. In
Hmm.
terms of partners, we actually JV'd on that one. So it was just bar down and one other group. And I really enjoy that partnership. I really enjoyed the JV partnership. I know people have mixed feelings about JV, but once again, I think it's really just doing proper due diligence on your partners, regardless if they're bringing money or if they're doing construction management. You have to make sure that you really vet your partners well. And that deal is a deal that it's gone through COVID. So the reason why I say to vet your partners really well is you are going to most likely own the deal in large multifamily. The average is 3 to 5 years on a syndication platform side. Over time, you will go through ups and downs. It's inevitable. You can't own your own home for a year without having some sort of construction come up, some sort of maintenance
Hmm.
issue. So when you extrapolate that over 100 plus units over multiple years, you're going to have something. That's why I think it's really important to vet your partners. And our JV partners have been supportive every single step of the way. So I really appreciate that. And I mean, it's pretty hard going through COVID. So I feel pretty confident that if we can go through that and come out on the other side, then that is really optimistic for future partnership deals with this group.
Mm. Yeah, yeah, totally. Yeah, COVID was a crazy time for a lot of people,
Yeah.
and even after. I mean, I know that you know there was a lot of like NOI increased dramatically throughout different asset types, and then people were selling, and then these people were looking for other properties to put their money into and overpaying. I mean, it was crazy. But can you tell us right now what the market is looks like? Like, what do you see in the market, and what opportunities you think that are available to people?
I think right now with the interest rates, we're obviously seeing people like really eager to jump in the game because the interest rates are coming down. The commercial real estate market is based off of the 10-year treasury. So it's a little bit different in terms of how the interest rates impact the acquisitions. They're normally similar or deposition or dispositions, excuse me. But in terms of where we're at right now, I'm sure we'll see transactions pick up a little bit and probably be rushed to closing before the end of this calendar year to getting depreciation because there hasn't been as many transactions this year. There were a lot of deals that were put under bridge debt that are still um, in tricky situations. So lenders are not in the business of holding real estate when they are distressed from a fiscal standpoint or a physical standpoint. So I think lenders are trying to be more collaborative in working with groups. And I think that we're normally seeing the hurt that's being felt in the commercial or in real estate industry normally through foreclosures. We're not seeing as many foreclosures as everyone initially predicted, and that's just because of balance sheet issues. The lenders can't take them all back. I think they're more willing to work with them, but I don't know how much longer they're going to be willing to work, especially as interest rates drop and they have potentially a new crop of buyers. I also think the crop of buyers that are left over in the market is not the same volume of, or maybe it's just different. I don't know from a number standpoint, but if you look at it from a demographic standpoint, you had a lot of student buyers in the run up, and it was almost like these students could do no wrong, but it was really just a reflection of the market was carrying all of these uneducated buyers. And what ended up happening is a lot of these students got burned. So not only did they lose the property, but they also lost their reputation and equity sources. I don't think those buyers are going to exist in this new round of buying season. I do think, however, we have a large interest of foreign buyers. And unlike Canada, the US doesn't have a deterrent for people buying in the US for commercial real estate. So potentially we'll have more foreign buyers come in and own real estate, but or large conglomerates, but I don't foresee the competition that we've had historically be the same. I actually think it'll be a lot less. So if you're interested in getting in, to me, this is the best opportunity to educate yourself to get in, because this to me is like the 2008, 2009 period um, that we saw in residential real estate, but for commercial real estate. The difference is that residential real estate, you can tell where the bottom is, and you normally can tell where the bottom is because transactions happen across the nation on a 45-day average period of time. So pricing is pretty reflective of where properties are transacting. Alternatively, in commercial real estate pre-COVID, it was between a 60 to 75-day lag time from when a property went under contract to when it transacted. In my opinion of what I've witnessed, I think that the transaction time has definitely been pushed out for a lot of reasons, namely because of securing of the capital stack, both from a debt and an equity perspective. So I wouldn't be surprised if the average transaction time is more like 90 days to maybe even over 100 days. The reason why that's of importance is because the date in which a property got under contract versus the date that it transacted is so much larger of a window. So when the quote unquote bottom of the market occurs in residential real estate, you saw it real time because the lag time for the transaction is so close. In commercial real estate, when we see the bottom of the market, it's too late. That means that it already happened about 3 months prior. So I think for a lot of folks who are waiting to quote unquote see the bottom of the market, they'll see it. They just won't be able to participate in it.
Mm, okay. So you definitely have to be ahead, at least by having knowledge and doing research as to how things are trading at. That makes sense. Um, so that's really interesting. Can we get into a little bit more about how you help students get into this? Like how do you would recommend someone get into this, figure out what their, you know, I guess what their strengths are and what they can do to get into it in a better way to actually succeed like you have.
I'm a firm believer that you really need to educate yourself, and you do not need to join a coaching program. Even though I have a coaching program, and I would love to say you, the only way to get into this is by joining the coaching program. And by the way, the best coaching program is Apartment Addicts. I would love to say that, but I don't believe that. So I'm not going to tell you something I don't believe. I believe the best way to get into multifamily is through education. You have two options when it comes to education. You can either get free education, which there is more education available for free than there has ever been. I mean, when I learned, there was no there was no free education, very few coaching education. Or alternatively, you can go through a coaching program. Either option will lead to success if you take the right steps, and either option will lead to no action if you take no action and pursue don't pursue it. So if you don't take the necessary steps to educate yourself and take action, regardless of whether or not you're in a coaching program or you're doing it on your own, you're not going to find success. So you need to decide personally what's a better avenue for you. If you're someone who likes to be in a group setting, needs accountability, needs structure, loves the networking piece, is considering partnering, needs capital resources, coaching, in my opinion, pays for itself tenfold. I mean, when you look at how much money you can make in multifamily, especially large multifamily, every coaching program, not just our coaching program, but every coaching program is a drop in the ocean compared to the potential. If you want to go about it on your own, build your own business, find all of the education, you can find it. I mean, it's a lot of work, but at the end of the day, you are either paying with your time or your capital. When you pay with your capital, it speeds it up. When you pay with your time, it's slower, but you're not having to fork out any money in the process.
Mhm.
Um, I joined a coaching program when I learned, um, but I only joined a coaching program. I think it was like, I want to say a year or a year and a half after I was already in that coaching program. And you might say to yourself, why would you join a coaching program if you already knew? I knew a lot, but there were other things I didn't know. But the best thing that that coaching program did for me is that the key principle I met in that group is still one of my partners today. And he can partner up to over $100 million per property, um, which means that to secure a loan, for anyone who doesn't know, in commercial real estate, you need to have a net worth equivalent to the loan size and liquidity equal to 10% of the loan. So for, let's say, a $100 million property, he would need a net worth of $100 million and liquidity of 10% of the loan. So let's say the loan was 80 million, he would need to have a liquidity of 10%, so 8 million. So when you are looking to scale and get bigger, obviously having someone like that carries a lot of weight, not only from a confidence perspective of when you're offering and your business plan and how you want to grow your business, but also securing those properties through lenders and through brokers because you can give them confidence that you can close. I also met three other partners in that group, one of which is a coach in Apartment Addicts today, and I've partnered with him on 5 deals, I think, already. And I mean, it's ongoing. You know, we partner again, but he's phenomenal. So to me, the coaching program, yes, there's a lot of knowledge, but the networking is amazing. You're in a group with people who are driven and focused and aligned. You know, you're not in this general real estate group where it's shiny object syndrome and you're hearing all of a sudden that, like, oh, development's interesting. Oh, building a rental portfolio. If you want to grow large multifamily, you're in that group. You found your people. So I think that that has a lot of benefit, and you can see them. You know, are they coming to all the meetings? you're coming to all the meetings. Are they coming out to all the meetings? What type of questions are they asking? That key principle, by the way, that I connected with, he actually reached out to me. I didn't even know he was in the group. He's kind of like a sleeper in these coaching programs. And he only reaches out to people based off of the questions that they ask and how involved they are in the community. So he reached out to me. I didn't know who he was and said, "Hey, can we have a call?" And I said, "Sure." And I didn't know who he was. And it was one of the best calls of my entire career. So it was something that I'm forever grateful for. He's a good friend of mine. He's partnered on every single deal except for one. We didn't need him, but all of the other deals, we work with him. He's absolutely phenomenal, and I'm lucky to have him as a partner. So you never know who you'll meet in a coaching program.
Hmm. That is incredible. I haven't heard a story like that of like just really having so much networking, value from a coaching program. But it seems like you really can find like someone that can really help you long term in coaching programs. So that's really great, and which leads me to believe that you know I saw I heard you talk about the importance of reputation. You said that in in the in the beginning you said that some of the students that were buying these properties, they risked the asset and then the reputation and the equity sources. And so I want to talk on um, reputation as the last thing here. How important is it to have a reputation, and like how to build it correctly in a way that you can have people like this key principal reach out to you and want to work with you, but also even with the equity sources, people that trust you with their money, their hard-earned money, so that you can create wealth for them and give them a financial retirement or whatever it may be.
Outside of your family, your reputation is the most valuable asset you have. You need to protect it at all costs. You need to be ethical. When you align with other folks, you need to ensure that their ethics, morals, their code of conduct all aligns with yours. Everyone can be hunky dory and let's partner together when everything is going well. The market's going well, the property's going well, that niche market's doing well. But what happens when you have an event like COVID? What happens, excuse me, when you have a string of bad events at the property? What happens when something personal happens to someone financially? Are they still going to make clear decisions and what's best for the investment and for the investors? This is why I believe the most important thing that you can ever do is protect your reputation. And then every single person that you let into your circle, you also vet them to a level that is almost embarrassing.
Mm.
So it's it's funny because there's this known thing in riding horses, and it's the it's building up the back muscle. So when a horse isn't ridden for a long time, their back is like a sway back. Everyone, I'm sure, can visualize a horse with a sway back. And what's crazy about it is if you ride a horse for a month, it'll slowly get better. It'll build up their back muscles. And there's certain ways in which you can build up their back muscles over time, but it takes a long time to build it up. But the second you stop riding, it can take days or a week or so for it to go back.
Mm.
And it's kind of a metaphor for your reputation, right? You got to work on it all the time. You got to protect it all the time. You got to make it stronger all the time. And the second you forget about it, the second you take it for granted, is when you can lose everything. I never think anything that you do, you should jeopardize your reputation. I think that you should always be on the up and up. I think you should look for people that are very protective of their reputation because that shows that they care, they want to do what's right. And what I have realized throughout my entire life is that people who are similar tend to hang out together, they tend to gravitate together. Very rarely does someone crack into a group of people where they're kind of not a fit. So, normally, not always, I mean, you can't rely on this. Once again, you got to do your due diligence on everyone. But normally, when you find a group of good people, you really want to be protective of that group as well. So everyone has a responsibility to protect who's coming in and out of that group. That's really important as well.
Okay, that's amazing. Thank you so much, Ashely.
Thank
Um,
you.
Ashely, if if you have any parting words that you can, tell our audience, please do so now, and also let us know where we can find you.
You can't dream big enough. That's all I'm going to say. And you can find me on Instagram at Bad Ash Investor.
Awesome. All right, cool. Well, thank you so much. We hope to have you on in the future, and hope you have a great day.
Thank you. You too.